I'm Greg Hunter. Welcome to USAWatchdog.com. With us, someone who works for a company with about $7 billion under management. He is the senior investment strategist. I'm talking about John Embry. John Embry, thank you for joining us today on USAWatchdog.com.
Greg, it's always a pleasure to speak with you.
Well, I'm remiss I haven't had you on sooner. We had tried to get you on before. On my end, I had technical problems, but I'm glad we have you on now. It seems like a very pivotal time. I keep hearing the school of thought out there that Greece is not a big deal, that a country with $350 million and billion dollars owed, who has to borrow money to pay their bills, it's no big deal if they default. And I just see headline after headline, just a couple of them. I mean, Cyprus is calling the IMF, quote, criminal. That the Greeks may turn to Russia, that the deal is going to be the same as a default. I mean, that's just a little smattering of the headlines for Greece. It sounds serious to me. Please tell me I'm wrong.
No, I think you're not wrong in the least, Greg. I think it's extraordinarily serious. I think it's serious because there's no palatable solution from either side. The problem is, I think is that the Greeks owe something in the neighborhood of 330 billion. I think it's dollars, not euros, but in any case, it's a lot of money for 11 million people, the vast majority of who don't appear to be working. Why I say there's no palatable solution is that, theoretically, if you lend somebody money, I think it's incumbent upon you to make sure they can pay you back. In this instance, the Europeans just put more and more debt on the back of the Greeks to sort of keep them current. And now when it's become obvious that they're utterly insolvent, they can't just sort of dismiss them easily because this paper is all through the European system. And I believe there's a lot of credit default swaps written on it too. So, I mean, if they walked away from this and essentially defaulted on the paper, I think it could be a major story. And the fact that they're trying to downplay it, I think, probably speaks to the fact that it is a major story.
Well, they're talking about having a Lehman moment. I mean, whenever you start bringing up, and this is not just a financial entity, this is a country. And then other countries in the Eurozone aren't doing so well. Last we checked, Portugal, Spain, Italy, none of those, Ireland, none of those are doing well. And if they say that if they do cut a deal, that'll be the same as a default. What do you think about that?
Well, see, that's the other problem they have, as you correctly pointed out. All these other countries that have sort of taken their medicine so far would be extraordinarily upset if the Greeks were let off the hook and left in the Union. So it's becoming more obvious to me that I think there is a possibility actually of a Greek exit. And if that happens, I think we're going to be faced with an awful lot of financial chaos. And they're holding the markets all in stasis right now. As you notice, there's not much sort of direction. They just basically are being locked in place. I think they're doing this in hopes that, the Greek settlement will be, okay. But I don't think it will be. So I would be very careful if I were an investor today, assuming that the playing field is going to remain level going forward.
So you're saying that if they do cut them a deal, it's going to be some kind of a debt reduction. And then what? Spain's going to say, hey, what about us? And Italy's going to say, we're up to it in our eyeballs, and we also have all these thousands of Libyans coming across the Mediterranean staying in our country. We need a debt cut, too. I mean, aren't all these countries going to be saying the same thing?
Well, I think they could. But, ironically, I have never been a believer in the Eurozone. So, I mean, the fact that it's starting to fall apart doesn't come as any surprise to me. I think the fact that it was ill-conceived from the beginning, it was forced on the public by the elites, and it held together as long as the economy was reasonably good. Now that the economy essentially is dreadful, particularly in the peripheral nations, I don't think in the fullness of time it can hold together. So this is just sort of the first of many acts in the dissolution of the euro, in my opinion, Eurozone.
So you think this could cause some kind of a daisy chain of default? I mean, not just a dissolution. I mean, most people look at that and go, so what? But it could affect us in America and every country in the world, could it not, if it starts,
I think the Americans are very aware of that, and I think they're probably greatly encouraging the Europeans to get some sort of a palatable settlement. My issue is I just don't think there is one, and we shall see. And one of the reasons why this thing keeps getting kicked down the road, and they're going to next week we're going to do something, and they never seem to get anything done, is they really don't have a solution, but they don't want to face the music.
Speaking of music, let's say they do cut a deal where they got this 7.2 billion, which is hanging there, and you know how governments are with money to spend; they got to spend it, and they give it to the Greeks, and they say, okay, well, we'll revisit this in September. Isn't this going to be the end of the road if they do get some kind of a deal? Germany doesn't want to give them another dime.
Well, I mean, I've seen comments recently that the Germans are fed up and they're prepared to let them go. But then there's this question of how much Greek debt is kind of polluting German bank balance sheets. I realize that a lot of Greek debt's been taken out of the private banks and put onto the books of the ECB. But still, when you're talking about a major default in as much as $330 billion, that's going to be a lot. That's going to shoot a hole in somebody's balance sheet.
So you think we could have a brace for impact moment sometime this year? I mean, would it happen right away if let's say they leave and at the end of the month they don't get a deal? How would you be preparing your company for that?
Well, I think that we pretty well are prepared in that sense because we have a fairly negative view on sort of things going forward. I think what we're looking for to sort of trigger that negative view would be a black swan. I think Greece leaving the euro or some kind of a really bad deal either way would qualify as a black swan that could get things going. And I thought it was intriguing. You just alluded to it. When somebody referred to this as the Lehman moment, Greece is the Lehman moment of this era. I don't know. Like I've often thought it would be something we didn't see coming. The Greece thing has been pretty, evident for a long period of time. But having said that, they still haven't solved anything.
You're saying no matter what they do, it's going to be an ugly deal. It's not going to work.
It has to be, because when you owe $330 billion and your country is in a depression of what's running 6 years, GDP's down 25%, unemployment's through the roof. I mean, this is a failed state almost. So I don't see a palatable deal under any scenario.
What happens if Russia comes in and says, hey, we'll loan you some money?
Well, Russia's not exactly flush itself, but I mean, I think the Russians are playing that card, and the Greeks are probably using it as leverage against the European Union. But whether it amounts to anything, only time will tell.
Well, what do you make of Russia saying that there could be another confrontation in the European theater? That they're putting their bristles up, the Russians. They don't like the militarization of Eastern Europe, and they're complaining about it, and they are saying that this could lead to war, in effect.
Greg, that's one of my greatest concerns. I mean, as you're well aware, there's a neocon faction in your nation who I think is really baiting the Russians in the Ukraine. I don't think there's any good guys in this sort of conflict right now, and I only hope that saner heads prevail, but it's messy, and there's no easy solution there either. That's what the world's confronted with now, a lot of tough situations to which there's no easy solution.
And when you say your view is negative going forward, explain.
Well, I think that the problem today is, as you know, since the global financial crisis, there's been something into the tune of $60 trillion of new debt created in the last 7 years. That's piled on an existing $140 trillion. At the same time, I don't think that all this stimulus that's gone in is really working in the real economy. I think you've seen a tepid recovery in a lot of places. I think that's largely behind us, and I can make the case that we're probably headed into a recession globally in the not too distant future. I don't believe, for example, a lot of the numbers coming out in your country. I'm more of a subscriber to the view of John Williams of Shadow Stats, that the U.S. economy is not nearly as strong as it's being portrayed. And I read, so there was a really fascinating headline in the Financial Times on Thursday, I guess it was last week, to the effect that the rich countries are going to have to take over the growth feature because the emerging countries are wallowing. Well, I don't think that's possible, because the problem in the rich countries is they're all, without exception, over indebted. And you reach a certain level of debt saturation if you're a great believer in Austrian economics like I am, and you just can't grow sustainably at that point. You have to do something about lowering the debt level, and that is a very painful experience.
Well, when you talk about lowering the debt, I mean, you're talking about just writing off debt, defaulting. I mean, can the world handle that? I mean,
no, it can't. I mean, basically, if you really want to be pessimistic, and I guess I would fall into that camp, to me, I can see two avenues at this point. You could have a hard debt deflation where you clean the debt out of the system like we did in the 30s, But look what that cost us, 10 years of depression and a Great World War. The other alternative, and they appear to be going down that path as we speak, is just keep printing enough money to keep everything afloat. But if you do that long enough, you debase the money and you're headed for a currency debacle and probably some form of hyperinflation. Either scenario, the end game is not good. You may be able to buy more time in the interim, and that's what we're doing right now. We're buying time, but we're not correcting anything.
Well, what I noticed as a reporter is that all of a sudden, for 6-7 years ago, when we had time to do something, we had time to pull the stick up on the airplane with the Erskine Bowles. They wanted to do $4 trillion over 10 years, $400 billion a year, and that would just slow the growth. And that is totally kiboshed. And now we don't even hear anything about debt deduction. I was reading online. I think our cash deficit, 18 trillion, been frozen. So you don't even hear them talking about any kind of debt reduction. We're not going to have sequestration. What does that tell you when the whole story of any kind of assessment and a plan to take on this debt is completely non-existent in the halls of governments, any government in the U.S. and Europe, anywhere? Nobody is worrying about. There's no stories out about fixing the debt. Isn't that going to play in your scenario of they're going to print money and they're going to run it and gun it until they blow it up?
Yeah, I think that's without question. I think these are smart people. I mean, they've made some mistakes, but they are basically smart people. They recognize that we're beyond the pale. The economies are extraordinarily weak now because of the excessive debt loads and what have you. And if you withdrew stimulus in a big way, either by sort of cutting deficits in a draconian fashion, or even worse, raising interest rates to any significant degree, I think the whole thing would come in on our head and we would trigger that hard debt deflation that sort of was a feature of the 1930s. There are no good solutions here that I can see. And so basically it's just kick the can down the road and hope it's in somebody else's watch that things go off the road.
So you think they're planning on a blow-up? That they're, as when you take a look at what they're doing, what their avenues are, they're planning on just printing money until it blows.
I think there's a possibility of that, Greg, for the simple reason that I think that you see more and more warnings coming from people who are sort of part of the system. They know full well that there's no easy solution to this. And so consequently, they're starting to tell the public the truth a bit. And this wasn't the case a while ago, but you see a lot of people that I would say are members of the establishment, the elite, are coming out with fairly strong warnings. And to me, that I would pay attention to those.
What do you make of Christine Lagarde blurting that? She could get on the phone and she could call the Fed and say, hey, listen, don't raise interest rates. Stop talking about that. But instead, she comes out and she makes a public statement telling the Fed in a public statement, don't raise interest rates. What do you make of that?
Well, I think this is kind of just an orchestrated dance between all of them. One day they say one thing and then the markets kind of react to that. Then the next day somebody else comes out and reverses what was sort of on the table the day before. And I would put Christine Lagarde's remark in that category. There was talk the Fed was going to raise rates, and people started to get nervous, and so consequently she came out and bam said you can't do that. And this is just part of the dance to sort of keep this thing, going forward as long as possible.
So you think it's just disinformation? You think it's just she's making public statements to mislead the public?
I think, without question, we're seeing so much disinformation now, it's frightening.
What are some of the disinformation points you see that is, I keep harping on that there is no real recovery, and I've been saying this since 2009. Wall Street recovery, but there's no real recovery. I think something like, 80 or 90% of the jobs that have been created are part-time jobs.
Well,
it's unbelievable. 93 million out of the workforce. What kind of a recovery is this that you have those kind of numbers? What recovery? Well, what are the disinformation points you see?
Well, I think one of the
just lies.
Disinformation points, and you just alluded to it. These monthly job reports that come out with the birth-death ratio creating the vast majority of the jobs, and the ones that are, the quality of jobs are terrible. And then you see so many of them are part-time. I think the whole labor side of the equation is a large lie. I think it's getting worse and worse, and basically personal disposable income below the top 1 or 2% is in decline. Is in decline in real terms. And I think that's going to be one of the factors that's going to lead to the weakness in the U.S. economy, because it's a consumer-led economy, and the vast majority of the people who have the highest propensity to consume have less and less money to do it with. So I see this as a huge problem. And so I just see so many numbers that come out that seem to be at odds with micro numbers that I'm looking at and that pertain to the economy, these macro numbers that come out of the government. They don't seem to stand up to the test of reality.
What are some of the numbers you see that aren't?
Well, one that was interesting that came out the other day was that JOLTS number and sort of all the job openings. So I sort of looked into that, and they're double counting these things. I mean, it's just everything. There's a spin to everything, and if you sort of really dig into them, they're not real. And yet what you get in the mainstream press is that they just take the number and run with it. And the public, basically, in my opinion, is being sadly misled.
John Williams, I called him on that number. I had a headline on the newspaper, and he said they're counting them multiple times. It's not real. And, so, I mean, words out of his mouth was totally nonsense. So what's the end game here? I mean, what are you guys bracing for at Sprott, Asset Management? What are you telling your clients? What are you bracing for? When's it going to happen? I mean, obviously, you're bracing for a crash. Am I wrong?
We're worried about that. I mean, to me, that's the timing. Like, if you look at sort of all the metrics, for example, on the U.S. stock market, and I've been in the stock dodge for over 50 years. I mean, this is about as expensive a market, with the possible exception of the tech boom at the end of 1999, 2000, that I have ever seen when you go through virtually any metric you look at. But having said that, I would say stocks on a relative basis are more attractive than bonds. I mean, I find it astounding that people will accept these interest rates on bonds when you can see the only out in the end is printing money, which is going to debase the value of these bonds, or the alternative would be the bonds are going to default if you ever went sort of the deflationary way. So I find stocks severely overvalued, but I find bonds more overvalued. And I would probably lump most of urban real estate into that category as well. So your traditional assets are extremely overvalued. To me, the only two really undervalued historical, safe havens are gold and silver, and they are significantly undervalued, and everybody hates them, which is an interesting conundrum.
Why do you suppose that the price of gold and silver have been languishing? I mean, silver's around 16 plus or minus, gold's around 1,200 plus or minus a few bucks. I mean, why do you suppose that is happening? Are you in the manipulation camp that this stuff is manipulated?
I've been in the manipulation camp for 15, 20 years. I've written long papers on it. No one seems to care, but all you have to do is examine trading patterns and what have you. And there is no question there's massive influence. But I think the most telling thing is that gold and silver went into vicious corrections in 2011. That was the very time that we were going into a massive QE program in many of the countries in the world. They knew they were going to debase the money. Gold and silver could not be allowed to be seen as alternatives. The public doesn't respond to rationale. They respond to price action. The price action's been horrible. Everybody hates them. They're the cheapest assets on the planet.
You think gold and silver right now are we talking about, they're as cheap as they were when gold was $400 an ounce and silver was 10 or 11 bucks?
I would say they're as cheap as they were when they were $250 and $5.
Oh my gosh. So you think that at $250 an ounce gold, that's like at 1999 or 2000? And
that's right. It's at the turn of the century that these things essentially bottomed. They had a strong bull market from 2001 through 2011. I think totally a justified bull market. There was interference in the market at that time. It was just sort of make sure they had a rise that was kind of controlled. But what's been going on for the last 3.5, 4 years is remarkable in the sense that they have just beaten these things to a fairly well at the very time that they should have been being accumulated as an alternative to what was being rapidly debased, which is fiat currency globally.
So what's the end game with gold and silver? So let's say the stock market gets into big trouble. I think brokerages are going to get into big trouble. Bond market, to your point, you think it's a horrible market, that interest rates are going to go up and either default on the bonds or print money to pay them. Mm-hmm. And so what's the end game with gold and silver? What do you suppose that will happen in the next calamity? First of all, I want you on record. You do think another calamity is coming. It is baked into the cake.
It's unavoidable.
Do what?
I think it is unavoidable. It's inevitable would be the word I would use.
No getting out of it.
No getting out of it. And I mean, if you thought 2008 was bad, and I thought it was terrible, this time there's no ammunition left. You can't take interest rates any lower. All you can do is print even more money, but that didn't really work the last time. It just sort of basically staved off the inevitable. So I think that the safety nets are largely gone. So when we do run into something untoward in the future, and it could be fairly soon in the future, I don't think there's anything really left to sort of stave it off. And I don't think we'll go sort of through a period from 2015 to 2020 after the next crisis like we did after 2008. It will be much uglier than that.
Oh, boy. In 2008, gold actually sold off for a little while. Do you think gold and silver could initially sell off? We get into a crash type situation?
I think they conceivably could, but this time, the last time they were coming off, sharp moves, they'd moved from like 250 and 5 up to, very high prices going into the global financial crisis. And this time they've been pounded down for 4 years. I think the downside is relatively minimal, and I say that because I see so many people negative on the subject, which comes as a great surprise to me. Because if you do the analysis on physical supply, demand, and what have you, there isn't a lot of this stuff around. And when people finally discover this is a good idea and they go to buy it, there isn't going to be much there. I like to say that the price is either going to remain in the current range for longer than we can sort of stand, but that when it moves, it will move violently. There is no mid-ground left. It's not going to be sort of a nice gentle rise from 1,200 to 1,500 to 1,800. I think it'll go like a scalded cat and probably through the all-time high in a relatively short period of time.
Well, China could push that along. There's more talk about them getting into the IMF, allowing them to be a reserve currency.
Well, what
do you think about that?
That's an interesting point, Greg, because that is being widely bandied about, that the Chinese have accumulated somewhere between 10,000 and 30,000 tons. I'd go with closer to 10,000. I think there's a very good probability they have accumulated that much. If that is the case, and they decide that they really want to push their point at the next get-together and get in sort of part of the SDR, which is being rumored as the new currency, and then everybody has to sort of put their cards on the table. I tell you, if the Chinese put their cards on the table and say they got 10,000 tons, everybody else is going to be shamed. And I think that would have an enormously positive impact on the price of gold.
Well, if you have enormously negative impact on everything else, wouldn't that cause a crash right there? Aren't you going to get a big gulp moment, like
I think so, and I hate to use the term because it's so commonly used, but black swan. Like, I still think that the thing that will trigger the next mess we probably haven't thought of yet, because basically they're pretty good at dealing with obvious problems. And I just think it'll be something out of left field nobody thought of that sets this thing off. And there's all sorts of possibilities, but I mean, time will tell.
Timing. A lot of folks are saying this fall we're going to start shaking it up this fall. That this fall
it's
really
interesting. That's the way I feel too. They probably can get through the summer because it's a quiet period. But next fall, I think maybe this is where the rubber really meets the road, because
fall, you said? This coming fall?
This coming fall, yeah. I would say September, October. I would be surprised if things are sort of as comfortable as they are today.
Okay, John Embry, Sprott Asset Management, you're a smart guy. Thanks for coming on there and giving us your analysis and all the stuff I'm sure you spend hours and weeks and months on. You boil it down to a 25, 30-minute interview. Thank you so much for helping us and showing us, giving us your analysis of the markets, Eurozone, gold, silver, the whole deal. Thank you, sir, for joining us today on USAWatchdog.com.
It's been my pleasure, Greg, and I'd honestly like to say I hope I'm wrong, but I'm pretty sure I'm not.